I say you can start talking. Govin, you can take it away.
Hi, Raman and Dakshi. This is Govind from TamilTV Bay Area. எப்படி இருக்கீங்க?
Good evening, Govind. Nice to see you here.
Vanakkam, Govind.
Vanakkam, Dakshi. Thanks for joining. I know it's a busy Sunday evening, so I appreciate you join and share your expertise about tax.
Sure. I mean, you would have been much busier than us, so definitely we appreciate your time too.
Yeah. Thank you, Raman. Thank you, Dakshi. So let's start about introduction about Ramanan and Dakshi. They have a Neeka tax consulting agency here, and they're famous in Bay Area last 20 years almost, I think.
That's correct, yes.
Yeah. So I call Ramana because I know him personally, but his actual name is Subra Ramanan. Subra is a chartered accountant from Sri Lanka, and he has done cost management account from UK and MBA from University of San Francisco, certified public accountant in California. So you want to add anything about more introduction about you and Dakshi Ramanan?
Yes, thanks, Govind. So yeah, we have been running this public accounting firm for almost 20 years now. So we started off, and I had been with the big four firms before starting my own practice. So the big four firms are, like, as you know, the international firms where they cater to the large corporations. So my expertise come from what I gained from that large big four firms, which I'm able to now take it to small to medium-sized businesses and anybody needing that kind of services. So the advantage is that some of the small businesses may not have access to resources that would be available to larger corporations. So that's where we come into play, filling in that gap for small to medium-sized businesses. Other than that, I've been with the big four, Coopers & Lybrand. It used to be called as Coopers & Lybrand, Ernst & Young, and I was with KPMG, traveled out of the countries. I've been to Zambia, worked there, and I was in New Zealand. So kind of internationalized experience I have. And Dakshi is also a CPA, and so we are here together.
So many of our TamilTV Bay Area viewers know about Dakshi. She has done some cooking show for us. So it's the same Dakshi, by the way. Thank you. And we have live, so people can call us. Let me share the number. One second. Dakshi, you want to add anything more about you?
I have a Bachelor of Science in Accounting. I'm a graduate, and then CPA, and also a firm as other CPAs and professional staff. We have many staff which we can service clients.
Great. Thank you. So I think your company is in Milpitas, right?
And San Leandro. So we have two locations.
Okay.
But in today's world, you don't need to be in one place. We have clients everywhere, out of state, in all different states, and also out of the country as well. So we have two offices, two locations now, but our clients are scattered everywhere.
I think you do both individual tax as well as business tax, right?
That's correct. Yeah, we do individual taxes. We do business tax, corporate taxes, partnerships, fiduciaries. We do accounting, audits, reviews, and IRS representations. If an IRS agent shows up at your doorstep, then we will represent you. So we do that kind of work, and consulting.
Okay.
Yeah.
Yeah. So our contact number here, viewers can call us 408-475-2552. Please call us with your tax question. We do have some specified planned agenda. We'll go through that, but definitely viewers can call if they have any question. So mainly a lot of people, they ask about the new tax law changes for 2018. So can you give us some summary about it, Subra?
Sure. Maybe what we can do is that we can talk about the I'm sure that if you have the skip to the slide over here to the
Srini, can you please show us that slide, first slide? Yeah.
So the major changes in the tax law changes, obviously back in December of 2017, there's a big tax law change, which after our current president got elected. So the act is called Tax Act and Jobs Act. Tax Cut and Jobs Act of 2017. So it's a major change for almost 30 years now. So every individual and business is somehow impacted by these changes that happen. So in overall general view, what it does is it lowers the individual and corporate tax rates, and it repeals the numerous tax credits and deductions and enhances the child tax credit, boosts the business expensing, and also repeals the famous Obamacare individual mandate. So the rates got changed. That's one big change, and the tax laws changed. So it goes hand in hand. Both got changed. So this is a slide that talks about how the old rates compared to the new rate, which Dakshi is going to explain right now.
Right. So if you can keep that, show that slide to the audience so they could see that. I'm talking about. So mainly this slide shows the old and the new tax bracket, the income and the tax rates. Slide up. Okay, so it's the next slide. The next slide. Okay, that's the one.
This one?
Yeah, this one. So if the audience can see that, that'll be good. That'll be great.
Yeah, they will be able to see it now.
Okay. So if you can go one forward, one backward. I mean the one which backward. Yes, this one. Okay, so this is for the married filing jointly. If you can see how the tax rates have changed. So from the 19,051 to 77,400, prior tax law you would have paid 15%, and now it's down to 12%. And the next one down, and if you see the changes, like 25% went down to 22, and also you can see the tax brackets are changing too. And then if in the prior, if you had made like 480,000, you would have been more than that. You would have been paid 39.6. And the current law, if you are making 480,000, you are down to the 35%. So, and the next slide will show this for the tax rate change for the single individual.
Let me jump in for a minute here, just to give you an idea. When we talk about the tax rates, these are marginal tax rates. In other words, there's a distinction that you need to make between marginal tax rates and effective tax rates. Marginal tax rate is every dollar that you make in that tax bracket is going to be taxed at that percentage.
Right, and the same here, the taxable income, this shows for the single filers and how their taxable income and the tax brackets have changed and the tax rates have come down. Okay, so now we can talk about the standard deduction. So in the prior...
so we can skip this.
Yeah, you can skip this one. On the prior one, the 12,750 was the standard deduction for married filing joint. That has been increased to 24,000. And for single individuals, from 6,350 has been increased to 12,000. And 18,000 for single filers with at least one qualifying child. And in the prior tax law, we had a personal exemption of 4,050. That has been repealed. So there's no more personal exemption. Instead of that, we have a higher standard deduction. Now the child tax credit, from 1,000, it has increased to $2,000 per qualifying child. And also the refundable amount of credit also has been increased from 1,100 to 1,400. And then also, if you have a qualifying dependent other than a qualifying children, such as an elderly parent living with you, you will get a $500 non-refundable credit for each person. And also the phase out has increased. It has been a big increase in the phase out. Before, the child tax credit will phase out from 110,000 to 400,000. At 110,000, that's been increased to 400,000 now. And for the single filers, from 75,000, it's been increased to 200,000. So you can see there's a big increase.
So for the viewers, just to explain, when we talk about phasing out, when the income goes up beyond a level, then some of your benefits and deductions and credits will get phased out. So those are the limits that got increased just to the benefit of the taxpayer.
And then the prior tax law, there was a 2% miscellaneous deduction that has been totally eliminated. And now the next one is the mortgage interest. A lot of people have like the wrong idea on the mortgage interest. Some feel that it's affecting everybody, but it's not. The acquisition indebtedness incurred before December 15, 2017, the limitation is still $1 million. So they don't get affected. It's only for anyone who got a new loan, the limitation is down to 750,000. And also it suspends the deduction for interest on home equity indebtedness, which was prior up to 100,000 you got to deduct it. But if it's used for home improvement, it's still deductible. Before you could get that and pay off like the personal credit cards, student loan, but those are suspended. And the next one is, the big one is the state and local tax limit. That has been limited to 10,000, limit for married filing joint, and 5,000 per single. That includes, this 10,000 limit will include your income tax, sales tax, property tax. But if you have a rental property or own a farm, that doesn't get affected. You can still claim the property tax. And the next one is the personal casualty losses. That has been repealed. Prior law, you can claim a deduction for any loss sustained, but not compensated by insurance or otherwise. So that has been suspended. But if you had a loss due to a disaster, that can still be claimed. And there are changes in the charitable contributions too. That has been modified. The 50% limitation for cash contribution to public and certain private foundation has been increased to 60%. And also the charitable deduction of 80% of the amount paid to an educational institution for the right to purchase tickets for athletic events is repealed. So there is no more deduction on that. And Subra, you want to add any?
All right. So taking from there, the moving expenses have been suspended, and no more deduction is allowed for moving expenses. So and then talking about the education savings, the Section 529 plans, you can even now take distributions up to $10,000 to pay for even the elementary or secondary school education for your kids. So that's a big change as well. Previously, it used to be it has to be college or education only. You can use the 529 plan. Now it has been, the rules have been relaxed now. So then let's move on with the medical expenses. Previously, there was at one time we had 7.5% of the AGI. Any expenses exceeding that AGI was allowed as medical expenses. Then it got changed with an age limit. But now we revert back to the old level, which is you can deduct 7.5% medical expenses exceeding 7.5% of your adjusted gross income can be deducted. So that's another change that we talked about. Then moving on to alimony. Now the alimony payments are not deductible, and also it's not taxable to the recipient. So that's another big change. And also there's a little bit of a tweak there, which is if there's any pre-2019 divorce agreements, then that can be still deducted. So there's a little bit of thing that you need to consider when deciding whether to deduct or not. So let's move on to long-term capital gains. Generally, the rates have come down. So there is a 0% capital gains rate, which is for married filing joint. If your income capital gains is about 0 to 77,200, in that range, your capital gains is tax-free, basically. In other words, it's taxed at 0%. For single person, up to 38,600 in capital gains is tax-free. Then the rate moves on to or jumps to 15%, which is from 77,201 to 479,000. Your rates are for married filing joint returns, it'll be 15%. So that also has come down, you know. So those are pretty much favorable tax rules for individuals. And also the AMT exemption, for example, it had the limit has been increased, and the phasing out of the threshold, we call it threshold for phasing out, which has been increased to $1 million for married filing joint. So the other major thing is that there is what we call, I mean, typically CPAs or the accountants, we used to call a 2% haircut, which means, you know, there's a miscellaneous itemized deduction we used to call, which always appears on your Schedule A at the very end. IRS used to give about 2% of certain expenses to the extent it exceeds 2% of your adjusted gross income as miscellaneous deduction. So we used to call it 2% haircut, and that has been removed. So that's gone. And then we talk about, are there any questions at this time from anybody, Govind?
Yeah, actually, one question, there was a ping message through message. They're asking about tax filing as a CPA. Do you just do tax file, or do you help them on the tax reducing? For example, somebody is making 100,000 and their age is 80,000. But do you suggest or help them to reduce their tax liability by suggesting them to invest in IRA or some 401k like that? Do you give them any tips?
Obviously, that's precisely what we do especially during this time of the year. Mm-hmm. So after October 15th and December, end of the year, December 31st is pretty much a tax planning period where we look at the client's records and overall situations, and then we pretty much plan their taxes, and with the objective of reducing or optimizing their taxes. So that's definitely a big part of our service to our clients.
Okay, thank you, Subra. We will post your contacts in our YouTube site. They can reach us out, or they can reach you directly, Neeka. And sure. That's what they're looking for. Also, how about business tax filing? Like what kind of process you do for them, tax filing? And I think you do accounting also for business filers, right?
Right. I mean, I don't know whether you want to still have the slides on, or you can, if you want, you can take it off.
Lights on.
We can,
all right, we can just go through quickly run through the businesses. So pretty much, as you know, that the tax law here in the US is pretty complex, and so we won't be able to cover everything in the tax law or tax code. But we can briefly summarize or point to certain major changes and that happened this year. So in terms of businesses, many of the deductions and credits for businesses either got extended or modified and got extended. So that's a favorable aspect of business taxes this year. And as you probably most of your viewers will know, that the C Corp tax rates have been reduced now. Previously, the highest rate was about 39%. It used to be a graduated rate at 39%, but now it has been reduced to a flat 21%. So typically, that's aimed at larger corporations to reduce their corporate tax burden, and so there has been C Corps have become a little bit more prominent and popular these days than the previous types of organizations or types of corporations. Section 179 deduction, which is now increased to $1 million with a $2.5 million investment limitation. So what Section 179 does is that if you want to buy an equipment or do major investment, capital improvement, instead of depreciating or amortizing the expense, you can claim it in the first year itself. So that amount has been increased to 1 million with a 2.5 million investment limitation, and we still have the 100% bonus depreciation. And one of the major impact on the small businesses typically is what they call qualified business income deduction, qualified business income deduction, which is based on qualified business income. Income is what it's based on. So in other words, what it says is that you can deduct up to 20% of the qualified business income in your tax return. So, but involves a very convoluted and multi-state calculation. So, so that is a major change this year. So pretty much most of the businesses would probably be considering at this point in time to do some kind of a multi-level entity tax planning, and also they'll be most likely evaluating whether this is the time for us to change the business type that we are in. So the major shift in our tax laws have been more in favor of businesses, and also giving some benefits to the individuals. So those are pretty much, but within each of these sections or whatever that we discussed, there's a large number of tax codes and areas that you need to address in order to get your planning done properly. So, Govind, do you have any questions?
Yeah, there was one question from the friends. His name is Maharajan. He's asking about carpool, like Waze or Scoop. When they are doing, they get income, which he says it's less than IRS limit of 35 cents per mile, and we don't get some form 1045 or whatever.
1099.
Form 1099.
He's asking, how do we file that?
Okay. It is considered a reimbursement. So it's not a taxable income. So you don't have to report that.
Okay. So this is the reimbursement for the travel.
Mileage, yes.
So if you want to take the slide off, I mean, we can go from on. Yeah, we can go to the next one.
Yeah. Are there any other questions?
So since you're talking about year end, so what kind of planning you suggest for people to prepare for 2018? Because we have only a few weeks. Mm-hmm. Usually hear that we can do some portfolio trading and show the loss in the current year and all like that. So what is the other tax tips you want to give?
Okay. So before we get to that in a minute, Govind, as I said, the qualified business income deduction that we talked about is basically they call it a new Section 199A deduction. Mm-hmm. So I mentioned that it goes through a convoluted and complex calculation. So these are pretty much the steps that one has to do, but it involves a lot of calculations need to be done in between. So let's move on to the planning. Mm-hmm. Govind, we can talk about the
last slide.
Yeah. So let's move on to the next.
Slide,
okay.
Right.
Yeah. So Govind, you talked about how to reduce taxes, right? That's obviously everybody's mind at this time, right? So pretty much what you have to aim at from an individual standpoint is to reduce your tax bracket. So earlier we went through a slide where we have tax rates and the taxable income, right? So the more that you move back into the lower tax bracket, your overall tax burden will be lower. Now, the question is, how do you do it? So there are two factors to that. One is you time your deduction. Timing of your income and deduction is the main thing here. Okay. So if you're in a higher tax bracket this year, you defer the income to next year and accelerate the deductions to the current year. That's what a lot of in accountants world, CPAs world, they talk about bunching of expenses, right? So, and then if you anticipate your tax bracket to be higher next year, such as you're going to get large bonus or whatever, then you push push the expenses to next year. So generally, what works best is to, for most of the individuals who are working right now, unless they're anticipating a retirement or whatever, most of the individuals, the strategy that would work would be push the income to next year and bring the expenses in the current year. So in other words, paying Uncle Sam late without paying any penalties is a good option. Because if you defer your income if you're getting a large bonus on December 31st or December 25th on your last paycheck, and you tell your employer to pay it on January 1st or after first payroll in your January, then you're essentially deferring your taxes for almost 12 months plus another 3.5 months, so about 18 months, right? So that then till April 15th of next year. So that's what one of the options that a lot of people would do. Or you can buy or sell marketable securities at the year end to optimize on your taxes and identify which deductions and credits you or your business will qualify for, or consider other events. A lot of the times, marriages, divorces, birth, or adoption of a kid, new job, retirement, everything would have a tax impact on your year-end planning. So call us, we'll be there, we can help you out.
Great. Yeah. So one question, like a lot of our people, almost 70 or 80% of my friends, they mostly do self-filing through some software like TurboTax or other software. So what are the common mistakes they do, or what are the issues you hear from your other clients when they do self-filing versus using CPAs?
Right. So now you can take off this slide so we can talk a little bit more freely without any interruption.
Okay. And there was another question about, let me read it 1 second. So one person, he has converted from 401k to IRA.
Right, so let me, are you still on the slides, or I'm not seeing your face properly, so. Srini can.
No, I'm showing Govind now.
Oh, okay.
We are not on the slides.
Oh, okay. Yes, Govind, go ahead, yeah.
Yeah, so there is a question about moving from 401k to IRA. So he has moved this year in 2018 401k to IRA, and he's asking, is there any specific form they need to file with IRS?
It depends on whether it's a direct rollover or an indirect rollover.
Mm-hmm.
A trustee to trustee rollover, which we call direct rollover, then it'll be reported on his 1099, which have the right code on it to report it. Obviously, it has to be shown on his tax return, but direct rollover is something automatically gets reported to the IRS. And if it's indirect rollover, it'll be shown as taxable on his 1099, but he needs to report it on his tax return with a special form to show that he has rolled it over within a certain number of days.
Okay. Srini, is there any call from the phone other than these messages?
No call yet.
And Govind, I know that you did said there was a question on gift cards. Someone wanted to know about gift cards from friends, whether they have to report that to the IRS.
Yeah. Mm-hmm.
No, the gift cards from friends they are not considered income, so you don't have to report that.
Okay, another question. Can we contribute to Roth IRA for minors?
To the extent that the minor has earned income. So you have to have earned income to contribute to either traditional or Roth IRA.
Okay. Srini, also, can you show their card, their business address and contact information? The first slide, I think, Neeka Accountancy.
Guys, we have a caller live, so he want to ask a question. Can I connect him?
Yes, please.
Yeah, just a second. Hello. Go ahead.
Hello, Srini.
Yeah, you can talk to
am I live?
Subra. Subra is online. You can talk to him.
Hi, Subra and Madam. This is Naga. Actually, I wanted to see you guys next week, but it's good that you brought up the tax session. I love it.
Thank you.
Sure. Yeah. Thank you.
Thank you, Naga.
Yeah, go ahead with your question. Naga.
Hi, Subra. Hi, Madam. This is Naga.
Yeah. Hi, Naga.
Hi,
How are
Naga.
you?
I'm doing fine. There's a little bit of lag in the thing.
Yeah, go ahead with your question. You can directly ask your question, Naga.
Okay. My question is, earlier I used to have a company and I used to do the 1099 C2C. But last year I got converted to W2 income, and I just want, what all the benefits we have on a W2 versus a corp, because I've been losing money on the other things. Because if it's a corp, it's a different tax bracket. But since I'm getting a W2 income, what all the benefits I have? Because I saw your slides were all focused on the company, but individuals like me, layman like me, we need to get some benefits. Can you guys put some light on that too?
Well, as I mentioned, as I indicated earlier, most of the tax law changes are in favor of businesses. And if you are just on a W2, only on W2 income, then chances of not much of opportunities, except for, if you are a family, you have kids or child tax credit. Some of the other changes that we discussed, like the itemized deductions, standard deduction has gone up, and medical expenses, the rates have been reduced, the amount that it has to exceed the AGI. Those are the individual tax changes that we talked about. But if you are strictly on a W2, you don't have any business, then most of your deductions would be business deductions. Previously, we used to be able to claim them under what I call the 2% miscellaneous deduction section, but that section has been completely removed. So unless maybe it's a bad time that you decided to go on W2, but again, it all depends on how much income you're making and what other tax situation you have, whether you're married, single, or your mortgage deduction and various other things, right? So if you want to come and talk to us, we'd be more than pleased to meet and talk to you.
Yeah, he will contact you. He will contact you.
Okay.
Thank you.
So there was another question from, so as you know, like a lot of our friends and TamilTV viewers are from here, Bay Area, as well as international. They might do file tax in India. So they're asking, do you help or do you provide any reference international chartered account in India? Do you have any friends?
Yes, I think as I mentioned earlier, we have clients everywhere. I mean, out of state, in the US and also internationally. So especially those country-based tax system, we would be pretty much working with another accounting firm or a tax firm in that country, and we will be able to evaluate the tax treaties between the countries and advise them as to work with the other counterpart and work with them in a way that will be most effective tax situation for them. So yeah, definitely we have firms that we work with in India, and we have firms that we work with in different parts of the world.
Okay, thank you. Srini, can you show the contact information, the card for Neeka?
So I think Srini is showing our main contact here. This is the slide that when the tax law changes happened, every time there is a change in our tax code, we all think that the code will be made simpler, easier, and also they talked about filing a tax return on a postcard, but it never seemed to happen that way, right? So So that time when this happened, so we decided to, we had a nice carton here which says, one person is asking, hey, what happens? And the other person buried into so much papers and says, Congress simplified the tax code again. So here we go. We are doing it with number of pages here. So that's how the life is. So, and that's why tax attorneys and CPAs are there to help the clients.
Ramanan, one more question.
Huh?
சர்க்கார் படத்துல விஜய் இந்தியாவில் போய் ஓட்டு போட போவார். அவர் ஓட்டை யாரோ போட்டுருவாங்க. அது மாதிரி நம்ம டாக்ஸ் வந்து யாரோ ஃபைல் பண்ணி வாங்கிட்டு போயிடுறாங்கன்னாலாம் ஸ்கேம் நடக்குது இல்லை? அதுக்கு உங்களுடைய சஜஷன் என்ன?
ஸோ ஒன்று விஜய் இங்கே கொண்டுடலாம். அவர் அந்த படத்துல அவர் செய்த சில விளையாட்டுக்கள் சில அந்த மாதிரி இங்கே வந்து இதான் செய்யலாம். I was just or the best option is to file your tax returns early as possible. So
once yours get accepted, the second one will get rejected. So file as earlier. The filing is better.
So நம்ம டாக்ஸ் பே பண்ற மாதிரி இருந்தா டுவர்ட்ஸ் எண்ட் கூட வெயிட் பண்ணலாம். பட் நமக்கு ரிட்டர்ன் பண்ற வர மாதிரி இருந்ததுன்னா சீக்கிரம் ஃபைல் பண்ணிடுறது பெட்டர்.
யா, அதுவும் ஒரு நீங்க சொல்றது ஒரு சரியான ஸ்ட்ராட்டஜி தான்.
The tax earlier file பண்ணினாலும் you don't have to pay till the tax due date. So நீங்க February file பண்ணினாலும் your tax is due only on the April 15th.
Oh, okay. Yeah. Oh, that's good to know. Another
Right. So you can pay your taxes by April 15th, but then
file your taxes
earlier you can file it. And also extension, if you go on extension, but still your taxes have to be paid by April 15th. Because extending the tax return or filing of the tax return doesn't extend the payment of the tax return, taxes to the IRS.
Okay. So this may be another complicated question, Subra. You can defer it. So when you meet hundreds of clients, what is the top 1 or 2 tips you give for tax savings?
It depends on whether I'm meeting the individual client or a business client. All right. So typically the process we take is that we review their at least last 3 years of tax returns.
Mm-hmm.
And first of all, to see whether there were any issues with the previous tax returns that can be of help to the client, by amending the tax returns. So that's one thing. And then we do a complete interview of the client, and then look at their family situation if it's an individual client. Most of the time, the businesses would have very complex approach that we need to make. So typically, sometimes, from an effective tax planning and an asset protection standpoint, people may want to create multiple entities to safeguard their assets in one entity and keep the operations in another entity. So we go through that in a very streamlined way. And in some cases, for example, if you're buying a commercial building, then we would be able to work with them to do what they call a cost segregation study, which once we do the cost segregation study, you'll be able to deduct some of the components of the commercial building in a faster way than what otherwise would be able to do that, right? So these are some of the strategies that we adopt. The IRS guidelines have certain specific rules how a cost segregation study has to be done. So in order for you to be safeguarded or protected from any further assessment and penalties and all that. And if you have entities abroad, and how do you structure a transfer pricing agreement between these related party entities? What guidelines have to be implemented, and how do you go about doing that? We do that for a lot of the businesses.
Good, Subra. Good. Thank you. And I hear that more than 2 you have CPAs. Other than 2 of you have big pool of CPA in your Neeka Accountancy. So we will happy to refer all our friends to Neeka, and TamilTV Bay Area Viewers can contact 408-263-3311. Dakshi, you want to add anything more?
No, pretty much I think we covered everything.
So we have more than us, a lot more other CPAs working in our firm, and also we have other tax professionals and professional staff. So we are there to help you or help any of your audience.
Thank you, Subra. So we will have a follow-up session. Probably, I know next few months you will be busy with the tax seasons, but we will share your information in our YouTube channel, and they can reach you out.
Right.
And
okay.
We can have more meetup session. Thank you, Subra. Thank you, Dakshi.
Thank you.
Appreciate.
Thank
Thank you, Srini, and thank you, Govin, and thank you, TamilTV Bay Area viewers.
Thank you. Subscribe பண்ணுங்க, like பண்ணுங்க, comment பண்ணுங்க. Thank you, TamilTV Bay Area viewers.
Thank you.